What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and welcome to the Market Primer for November 28th, 2022. Let's start off with the S&P 500. The Turkey Day week was met with, I would consider this just your normal holiday kind of trade. Just a really, I'm not even sure it was low volume. It was just constructive. Like, we tend to not see huge moves during weekends, during holiday trades. We will see huge moves in individual stocks like low float names, but for broad markets, it's just normal, right? And it's weird to say that. We have seen volatility compression. We're seeing intraday ranges contract a little bit. It just doesn't feel as wild as it did basically for the past few months. And I'm just coming to this realization. Like, when we had this rally at the end of summer, it was just straight up. I mean, it was a monster kind of bear market rally. And if you look at how the market's trading, so in June we had some sideways action, and then we had this just straight up and then straight down trade. So the October sequence, we had a CPI gap down that flushed out everyone. We retested that level, came back into prior resistance right here, gapped up. That gap up failed, but we found support. And then we saw an extension and a reset and an extension and a reset. So we're seeing more give back and more pullbacks that are not completely falling apart. Right, so there's just some constructive things happening, I think, in equities, and this is most likely driven by bonds. If we look at the 10-year futures market, it's not going straight down anymore. We're not seeing that kind of move. So bonds are stabilizing. The macro backdrop seems to be normalizing a little bit. We know what the risks are, so they're easier to price in. The Fed's coming to terminal probably at 5.25 into March. And so everyone can just get a better feel for how these things work. On top of that, I think a lot of institutional positioning in equities could be a little bit underweight, which could help as well. So I say all that with the context of our roadmap, and I'm just going to continue to point out the 409 level right here. And if we take off all of my notes, if I can do that, there we go. You can see that's where proper inventory starts. And that, I'm pretty sure, is coincident with this as well. Let's get my pen back right here. So that's the S&P futures market as well. So, I think that's where the market's going to take a bigger pause. And I think that's going to be where, if we see a move into that, it's going to be a little bit harder for the market to see a big move, because we've got some inventory here. We've got a failed gap up. We've got all of these buyers into this. And as we push into that level, we're probably going to see some liquidity come back online and say, okay, I probably want to sell right here. All right. So that's just the risk that I see, but we're not there yet. We have this gap in liquidity where anytime we have pushed into this range, we've seen swift moves, fast moves, no volume. It's just either straight through it or straight underneath it. We're not seeing it right now. We're seeing actually some price acceptance into this and more volume building out. So again, constructive, but it's tough to make the call for what the market's going to do into this range. Right, it's just not a lot to work with in our roadmap. We do have two LVNs that could come into play. We've got inventory building up to 409, but don't try and read too much into it. In trying to find a million different levels into this, and if you contrast that with how we've built out our levels over the past few months, there's a lot of places where we have a lot of density with our information, and some places where we just see straight shots through it. Very similar to this May, July range with lower volume, and anytime we see a push into it, it's just strong, wild movement. All right, that range for me, completely unpredictable. No idea how that's going to play out. Okay. But once we get into some higher level density and more information, then it's a little bit easier. So just keep all that in mind. Okay. So the big thing here, we've got volume shelf inventory coming online at 409, a swing anchored VWAP from all time highs, a downtrend line all coming into play right here. that's the target. That's a place where it would make a heck of a lot of sense to consider hedging or lightening up exposure or considering a little bit more aggression to the short side. I don't think it makes sense to have that kind of mindset yet. All right, in terms of underneath the surface and weight of the evidence, I don't think we're there yet. And what do we need off of these lows or this open? That's about 1.8%. Right, that's not a lot. That's a normal price movement to the upside. So we just want to keep that in mind. Okay, let's go to a 15-minute chart. And again, I don't think I changed any levels on this. I changed some of the levels on the Qs and just tightened up those levels. But a lot of this, these levels I drew back a full month ago and change. And you can see how they're working pretty well. We've got this support level coming in right here, the support level that held. This became more of a springboard point instead of support and resistance like it was during mid-November. Resistance was a little pause. This level we've talked about, that retested, and then we traded sideways on Friday as the market closed into the holidays. So yeah, these levels seem pretty good. They seem to be working pretty well. So our downside levels are pretty easy to work with. Right, so first one to the downside is going to be 399.11. That one seems a little bit too obvious since it was the low of the day right here, but hey, it just might hold. Underneath that, I'm looking at 396.89 to 397.5, right about here, and that's the LVN and start of the volume shelf, prior resistance, potential support. Okay. We do have the other end of this, which could be a support level, but given how it did see some price interactions. There were just minor price interactions, and we would pull back into it. But there was some decent pushes. So 394.5 would be the next spot to watch to the downside. And then if that gets taken out, there's going to be some levels. We got swing anchored VWAPs coming back from some key pivot levels. We've got this support level up above that. So you can draw this as one big range, or you can split it up, but 391, 3/4 all the way down to 390.12 is going to be pretty good to work with. Okay. Underneath that, we've got, 385 to 386, 3/4, and then underneath that, maybe some gap fill stuff. That would require a lot of downside movement. I don't think we're there yet, but those levels are there if you need them. To the upside, 404.42 to 405.25. Above that, we've got that 409 level that I've been talking about. And I'm sure we can find, if we really wanted to squint and we wanted to look maybe at an hourly chart, that would give us a little bit more data to work with. So yeah, about halfway in between that level, we've got a pretty big LVN, which is going to be about 407.80. I'm just going to draw this with a crayon. It's not super precise yet. But right around here is one to look at. So we'll just mark that in green. And so that splits up that wider zone pretty well. And if you look at interactions with that to the left, you got here, here, and here, and some closes here, some interaction here, a gap fill right here. So that's a good place to work from too. So 407.5 is going to be one I'm going to be watching. Okay, let's take a look at the Qs. Qs did not trade the same as the S&P, and that has to do with index weighting. But still, just more sideways constructive action. Let's just pull off all these drawings. Big inventory starts coming into play, back up at 310. Okay, and don't sleep on the Nasdaq, right? If Apple has some good news and it pops, just because of the size and the market cap weighting, it's going to push this entire index higher. All right, so just keep that in mind. One thing of note, and I'm just looking at this LVN right here is pretty deep, and that seems to line up with resistance here, about support right here. You can make the case for resistance right here. So that's going to be one I think is pretty important here going forward. Okay, so let's zoom in. We're going to do 15-minute chart. Very similar kind of structure as the S&P. And I want to put swing AV up against the CPI low right here. Okay. Just taking a quick look, the first downside level, gap AVWAP right here could come back into play, and there's been some price interactions about 285 to 286 right here. To the downside, we've got 280.5 to 281, And that one seems to be pretty simple and a little bit trappy, it feels. We've already tested that twice, so you may want to see a little bit more push to the downside. I want to capture more volume data for this. Just underneath that is going to be this LVN. So we could see something where if the market did sell off, we come into this very clear support buy. Where you're going to put your stops, you're going to run through this just a tiny bit, clear out all those stops in reverse. That could be a decent reversal play to work with. So I'm going to draw, again, just throw a ray on here. And I'm just going to mark this really quick. And underneath that, I'm going to mark the other LVN right here. And so that kind of divides this wider zone up into a little bit more logical levels. And again, if you take a look at this line, interactions here and here and here and here and here and here, you could say right here as well, and right here. So there's some plays, I think, coming into that as well. And that's going to line up with the swing AVWAP from those lows. So that would be kind of the ideal buy it this week, especially if that happened like on Wednesday or Thursday. I think that would be a great entry. To the upside, we've got this LVN right here, which I still think is valued. That's going to be 291.37. We've got this LVN at 297.5. Some inventory, smaller inventory coming into play, and just keep an eye on some of those summer trading levels, and just go and look how those interacted in the past. Like this wider range right here could be a shot to look at. So I think all of these levels still work pretty well. And I know it feels like a cluttered chart until you actually open it up and you adjust for the volatility in the market. And they're really far away. Okay, so I don't want you to go in and look at a daily chart and say, oh my God, there's like a million levels right here. That's just because we're really zoomed out. Next up is IWM. This is the Russell 2000 small caps. Thing to point out, the massive HVN all the way back up at 222.5. And that could come into play next year. Don't sleep on it, okay? So just keep that in mind. Keep that bookmarked a little bit. We have the swing AVWAP from all-time highs as well as this downtrend line coming into play with a little LVN right here at 191.75 to 191.20. And that, again, that coincides with the big level in the S&P as well. Let's zoom in. We're going to go to a 15-minute chart. We're going to take a look. These are fresher levels. That's why I have them marked in red, because I'm not as certain with them. But that did mark the high right here. This one pretty much marked the low. So we've got some levels that the market's at right now. I think 186 to 186.90 is going to be a bit of an issue. We've got some inventory right here. You can see that with the HVN. So if it clears above that, then maybe we'll see a push to highs. If we do, then we've got that swing AVWAP, that trend line, both coming into play, and that's going to be right around 191.75 up to 193.22. Now, the AVWAP and the trend line will continue to adjust down as more time goes on. So I know that's a wide range. So you just want to see where price lands when price gets there, and which one's going to have reinforcements with the trend line and with the AVWAP and so on. To the downside, really quick, 183.13. Then 183rd, then we've got a range at 177 to 179, and then some bigger levels coming into play back down at 175, 175.81. To the upside, we're at some levels right now, so that's going to be a bit of a decision point going into Monday. Bigger levels coming into play at 189 to 189 2/3. And then to the upside, our wider range at 191.75 to 193.22. That's going to be with that swing AVWAP. And then we'll see what this looks like going into next week. A couple things really quick on the volatility front. The VIX has come back and almost round-tripped back down to the late summer levels. You don't get bearish on the VIX just because it's low. All right, and I've talked about this before, but you don't want it when it's down. You want it when it's down and it had stayed down for about an OPEX cycle. So don't get crazy and think that the market's going to roll over just because the VIX cracks 20. Okay. You also have to remember, what's our 30-day window? Christmas. So the market risk premium is going to include the holidays, so we might see an overshoot. We might see spot VIX trade into the teens again. The VIVIX is back down to lows we haven't seen since 2019. I don't think it's that much of a bullish signal right now. I just think that institutions don't have a need for VIX products right now because they're underpositioned, and so you're going to see no one wants to sell a ton of vol. and nobody. I'm sorry. You have nobody wants to buy a ton of vol right now, and you have vol sellers who are using the VIX futures curve in a very advantageous way, which is helping. I mean, God, look at that. That is a bullish kind of structure in the VIX market right now, and it's very difficult to make a bearish case as long as spot is lower than front month and front month is lower than next month, and as long as that continues, the party can keep going for a while. One more thing to keep an eye on is the MOVE index, MOVE. This is the bond volatility. It's like the VIX for bonds. I have no idea how it's actually calculated, but basically, if this rolls over, that's good for the markets. All right. If we can see bonds get priced in a little bit better and we see less bond vol, then that's going to help things. Okay. That's what we got going into this week. If you have any other questions, feel free to reach out. Have a great day.